Good evening, everyone. Welcome to Animal Markets webinar. Today's focus, Nenad and myself, Chris, are going to take a look at identifying key decision zones in the market structure. Before we kick off the webinar, though, just a few kind of messages that we would like to communicate with you. First, if you are on Twitter, you can follow us here with these Twitter handles. Second of all, this webinar is shown to a global audience but may not be suitable for everyone. Please visit animalmarketsglobal.com, select your country of residence, and contact an appropriate entity for more info. Third of all, this webinar is also, trading for exchange and global financial markets is considered higher risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, here you see Nenad and myself. Today we're going to be talking about basically finding decision zones. What are they? Why are they important, first of all, and how can we find them, and what can we do to trade them? So basically, just an introduction here, a quick introduction about what decision zones are. Well, basically, I talked about this already a couple of weeks ago, but a quick refresher here. Analysis, I look at three things here: trend, impulse, support or resistance, and patterns. So every trader is going to have a different way of doing this. Some might only look at patterns, but I like to look at, to get the full picture, I like to analyze all of these elements, and then I understand the market structure more deeply, and I understand if that's a good situation to trade on this particular currency pair or instrument. All right, so this is what I call the triangle of analysis. So when I do that, and I understand that there could be still some trend continuation possible, for instance, no matter if I basically what I'm looking for, if it matches what I'm looking for, then I continue. If not, then I look at a new currency pair. So if I continue with that particular pair, then I start to dive into these things. I start to look at confluence, decision zones, and I look at what kind of trigger am I interested in trading. So that's the next step. And when I have done that, when I say, okay, I'm looking for price to bounce on the euro dollar at 105, a bullish bounce. So that's a decision zone. Either price is going to bounce or break. Basically then I look for a certain trigger that confirms whether it's bouncing or breaking at that zone. And then I can talk about or think about entries, stop losses, and targets. So that's more the practical part of it. So why are zones key? So basically, the advantage of waiting for a decision zone, a couple of advantages I mentioned right here. Maybe more of them available, but for the time being, these four I think are one of the most important. So waiting for a key movement. So, the price can basically go sideways for a while. Let me give you some drawings. For instance, you might see a bearish impulse, for instance, and price might go sideways like this, right? See that so often in the market. So when price reaches a decision zone, when price has retraced up to, for instance, a certain resistance level that is key, and it bounces, then there could be a key movement. There could be a large movement following that correction. So waiting for that correction to finish and trying to catch that continuation to the downside, there are benefits of that. There are major advantages because price could really push far and long. So waiting for that particular movement to happen is beneficial, right? There's a lot of pips there to be potentially caught in that, in that downside, in that red arrow, which means that connected to that means that the trade could develop faster because price is going with momentum. Also, don't forget that if we try to catch trades in here too many times, that we might just lose energy. As traders, we might get fatigued. We might give up. We might think that, and there is some reason for that. There are certain rules that we have regarding risk management that force us to stop, or we might be over trading if we continue. We might lose psychological balance if we continue trading. So there's some good reasons why we should stop, actually. But it would be a pity, of course, to miss that move. So if we are a tad more cautious, perhaps, with not over trading in certain areas, uh, and find a balance and try to, grab the trade that we think has, let's say, more potential, there are advantages that we don't get fatigued and we can catch that huge move, and there's that more pit potential in such a move. The other advantage of waiting for price to hit a confluence zone, a decision zone, is because there's more weight attached to that level. So price has to is forced to show its direction. All right, so when price is doing this kind of movement, it could still be bullish or bearish. There's no real intent in the market. So if we have momentum, if we see momentum, or if price reaches a key level, then there's more likelihood that price is going to make a sustainable move instead of some wishy-washy kind of correction patterns. And ultimately, if we put this all together, we're just looking at better reward to risk ratios. So sometimes I would skip a trade to the upside or to the downside if I think that the space is small and basically there's more space in the opposite direction. I'd rather wait for price to make that retracement, finish the retracement, and look for the turnaround. Also, one more thing from a psychological point of view, if we're focused on catching this small retracement trade, it's not easy to reverse our minds and start to look for trades in the opposite direction when it does hit the retracement or the decision zone. That might seem silly in a way, but that's really how it works in real life. In theory, it seems like doable, right? Trade it up, then trade it back down at the levels that are key. But in real life, that is really difficult. I'm sure there are some traders out there with maybe some more experience than, let's say, the beginning trader, the intermediate trader, or however you want to call it, that are more active in the market, can do this easier. But if you're starting out and, or just like, as I said, around break even, making some small profits, it's better, I think, not to overtrade, not to do too much of both sides on one day or 1 week even, depending on how you trade. Just the focus is not there, and it's difficult to balance the focus on both sides. So that's why I think these zones are key, and that's why, in live webinars, I'm always looking at zones. I'm always thinking like, okay, I'm analyzing the currency pair and saying, is this interesting? If yes, where do I want to see price? What is interesting? And which direction would I want to trade it? Which triggers am I looking for? So, good to see you, Ilya. Everything's doing fine. Everything's great. Hope that you are doing well as well. Let us know. And, spotting and trading the zones, basically, there could be a lot of things we can use for decision zones. There's really no limit in fact. Yeah, no problem. Here are some of these key advantages, but there's actually also some psychology behind it. I just talked about is really not really mentioned in any of these four, but that could be added too. Psychology, patience, waiting for the trade to come to your kind of analysis instead of chasing the trade, waiting for basically price to develop as you expect, as you want, as you plan, waiting for the trade to come to your terms and conditions in a way, instead of looking at price. This happens often. One more thing, actually, just thought of it now. One thing happens often is that you see price moving like this, for instance. Let's do it to the upside now instead. All right, and then often it's thoughts in our mind that are twirling through our mind and make us kind of do things that we don't want to do. So we see price move up, and it happens so many times. Like the trader thinks at this moment I want to buy. It looks that's all kind of reasons. Let's say that there was a good buying opportunity, but the trader doesn't do it, and then the price is up in here, and then you're beating yourself on the head. I should have bought. Why am I not in that trade? And you still look for that trade, and you trade it kind of in the middle of nowhere, and then this happens, right? You get out of the trade, and then the trade continues. This happens often, or something similar to this story. And that's the problem when trading it kind of in the middle of nowhere instead of waiting for a more clear decision zone. Maybe this is a 50 fib, maybe this is a bull flag. That will give us more indication of where a key support zone could be and where the trend could continue, for instance. There are a lot of decision zones. Fibs are one of them, but trend lines, you could use anything really. Anything that you feel comfortable with. I have really no limit here. Anything that you use is, I think, probably possible to use as a decision zone. I myself use fibs, and I'm going to talk about that on a live chart right now. So basically, I'm going to share some of the tools and concepts that I use, my favorites, for deciding what is a decision zone. But with that said, the ones I show are definitely not the only ones. I think really it just depends on how a trader practices discretionary technical analysis. So I think it's just a question of practicing using the ones that you prefer really. Now regarding basically the trigger, and that's something, we got a webinar coming up, folks, on confirmation and validation levels on December 8th, if I remember correctly. We got a whole bunch of webinars already lined up, actually, all the way to January 19th, so you can sign up now before it's too late or after this webinar. But somewhere December 8th, here we go. Yes, learn how to set up invalidation and confirmation levels. All right. Anyhow, let's move on. Alrighty. Any preference for particular currency pair? I don't really mind. Just if anyone has a particular favorite, just let me know. Otherwise, I'll just choose one randomly myself. But Euro pound. Alrighty. Twice. And odd yen. Okay, cool. So let's see. Euro pound. All right. So I wanted to talk about fibs. And fibs basically, I think, are very, very useful for decision zones because they really really give a great indication where price will struggle, where it will pause, turn, and what kind of target it might go to. So I use fibs on candles and swing highs, swing lows. So I'm not going to dive into why I would use why I would place the fib, how I do it, because that's a totally different topic again. We got webinars on fibs, luckily. You can go to Iron Market's YouTube channel and type in Fibonacci, and I'm sure there'll be a lot of choice there. But basically, just generally speaking, these levels give awesome analysis about how, where price could really struggle, could turn, and I'm going to show you some examples. So for instance, here you can see the retracement stopping at the 50 fib zone, roughly speaking. We could put it even on here like this. As the first correction is made, 61.8 fib gives the resistance spot. And here, just setting aside the analysis, all right, we would have to, of course, do our analysis and come to the conclusion that there could be a potential retracement. And that is something that, if I remember correctly, we did talk about in our live webinar, for instance. So if one is doing that, then a trader would be looking at these fibs as potential stopping spots, at least potential pausing moments. Is there going to be a huge reversal? Sometimes I'm not sure about that. There should be divergence, for instance, or there should be some things indicating that there could be a reversal at this spot. When that happens, there's extra confirmation that a reversal might happen. Then these fibs become stronger. But will these fibs really be turning spots for an entire reversal or a bigger retracement? Sometimes I'm not 100% sure on that. So sometimes these levels could be pauses. So that's why when I talk about trade management, I'm saying, like, if there's a bull flag, get out of that trade, because then it looks more like a continuation, for instance. In this case, there was plenty of momentum here when price hit the 61.8 fib, and plenty of momentum there. Now this was a bit of a bigger correction, so I'm not sure if any trade would have survived that necessarily. But point being, the fact that these fibs are the decision zone, and price reacted pretty strongly at first to those levels. And you can clearly see momentum here and here. And that's different if price would have done this and created the bull flag. In that case, with the trade management perspective, I would definitely be more careful, because it looks like the price is respecting those fibs, but that's it. It's not reacting to it. So that's typically what you would see, I think, on average. And this is just a guesstimate. This is not a statistical calculated. I would say that if the fib is done properly, 2 out of 3 fibs will get respected on the particular time frame you're looking at. So in this case, you see, for instance, that price respected the 23.6 fib, the 50, and the 61.8, roughly, but not the 38.2 fib on this time frame. But if we would go to a lower time frame, there's a good chance that price would still respect that fib. So when I use a fib on a daily chart, and I'm looking at the hourly chart, what could happen is something similar. For instance, let me show you a different example. If we put a fib from here to here, we might be looking at these fibs, the shallower fibs perhaps, because the momentum was pretty strong. So we might not expect a deep retracement at that time. If we do our analysis, remember, we're not going to do analysis now. That was done before. Now I'm talking about decision zone, so I'm mostly skipping the analysis. Let's assume that we saw this as momentum. We're expecting a shallow retracement. So what are the decision zones in that case? Decision zones are these fibs, the first 3. Those are levels where price could stop, right? Now on this particular time frame, we don't see price respecting the 23.6 fib, but we do see price respecting the 38.2 fib. But if we would zoom into the hourly chart, there could be that price stopped at this level, paused there for 2 hours, and continued. Maybe not, right? But my point is that if I would be looking on the hourly chart with these fibs in mind, I would be careful with taking a trade on the hourly chart to the downside right at this fib. I might be actually looking for reaction instead at this fib on the hourly, right? Just like I would do on the 38. So that gives the clue that these are key levels, and I would be careful with these levels on all time frames. Now I would not be careful, obviously, if I use a 15-minute fib. That does not really have any influence on the daily chart. It only works downwards. So I hope that's clear. So that 38.2 fib gets respected on this daily chart. We see the turn slowly but surely. I mean, this is a daily, so it does take quite a lot of time. This is about a month worth of trading. But ultimately, we get to push right up to target. So that's the next phase. These retracement fibs are levels that are respected, decision zones, and these are targets. And you can see here also respect for that minus 61.8 target there. Now, fibs are one thing. Another way of looking at decision zones, in my view, is looking at chart patterns and corrections. So for instance, when this correction is being made, an ABC zigzag, that's a zigzag pattern. Or here, this piece here, bull flag, right, within the momentum to the upside. So when price respects the target, like in here, we can put the fib on. Like this, minus 272 target respected. So what kind of decision zones are there? Well, there could be a counter trend from here, from these fibs. There could be with the, let's say, with the trend trade still because this could be a zigzag pattern at these fibs, right? So those are decision zones, and the pattern here itself is a zigzag pattern. The bull flag pattern would be different, right? It would be looking at breaks. Decision zone could be the break of the trend line. It could be respect for the bottom of this triangle. So corrections themselves, they offer potential decision zones too. When price basically goes in a flag, let's say like this, what are decision zones? Well, decision zones could be the top and the bottom of that flag. For instance, if we have, let me take a look on the 4-hour chart here. Let's see. Okay, there's a flag here, for instance. Small one, but I don't see anything better at the moment. So let's dive into, that's the flag on a 4-hour chart. So on an hourly chart, these lines are basically decision zones too. Will price bounce at support or break it? Will the flag hold or fail? So, corrective patterns like that, decision zones too. Momentum. If price is showing a lot of momentum, like this, then typically there, of course, at some point price will stop and turn for correction. But when momentum is visible like this, the support and resistance eventually they either break immediately or later on they will break with a renewed push. So from my perspective, the value of a decision zone is less if momentum is going against it, and is stronger if momentum is going with it. So it changes this kind of balance. So for instance, when price is starting to push up like this, then I would not look on hourly chart for a stopping point. I would definitely look at higher time frame to understand, okay, where could there be some resistance spot? Where is there maybe a top or bottom from a 4-hour, daily, weekly chart? But I would zoom out to see at what level could there be, a confluence that could stop that momentum. All right, so why is that important? It could be important for targets to the upside if I'm trading with the momentum, or potentially reversals. But be very careful with trading against momentum. It will be good to see divergence. Maybe then in that case it could be an ABC zigzag. And be also very careful that if the momentum stops and you see a correction like that the trade is not going our way. So I zoom out in that case to understand where it could stop. Also, going back to the hourly then, in that case, when I see momentum like that, and price does finally stop and make a correction like this, what does that mean? There's also a good chance that price will find a decision zone at support. We see a pattern here, an inverted head and shoulders, for instance, and we probably see price going to a fib, and we see momentum here. So the decision zone is more at support than at resistance as the momentum is showing up. So when we have momentum, I like to look at higher time frames. I look to look at tops and bottoms and confluence to understand where the targets are, where could price stop, and but primarily still more interested in finding the retracement, most likely. There are times, of course, where bigger reversals do occur. but those are less often than we think. So the colored EMAs is a special indicator that I can send to you, no problem. Let me just write my email address for you there. So let me recap this quickly. No, we got a question here. When price retraces if price retraces to a shallow fib, yes, that means indeed that there's a good momentum. And if price retraces shallow, it's a relatively strong market indeed, because well, what happens is that if you have something like this going on, you have a first push, often you'll see a deep correction if it's a first push, or at least to the 50. Then you'll see a stronger push, and then if you have a shallow correction, that means you just had a pretty good momentum push. So yeah, then you'll typically see one more push up. In a wave perspective, that's a simple 1, 2, 3, 4, 5. So let me wrap this up. Take a look at the euro dollar. We can take a look. I don't think we can look at all these pairs. Quickly on yen. And yeah, it's not maybe that relevant which one I choose, but for instance, okay, just to highlight it. So when I do my analysis, I look at trend, patterns, support and resistance. So I tend to look at a lot of time frames, but let's say we start with the daily chart. So what we see here is clearly momentum up. So trend is up, momentum is up on this daily chart. So we can look for patterns. This could be maybe an ABC zigzag pattern, so it'd be good to know where the targets are, right? And the support and resistance, we can see clearly 272 target. We can see resistance here, and perhaps even as low as here, something to be aware of. So we can see prices at resistance. The trend is up, the price is at resistance. So from this perspective, you know, there could be good to wait for a pattern. This is a decision zone itself. I would be interested in trading it to the upside because the trend is up, but not now because price has already moved a lot of distances. We're right at a decision zone. So am I interested in trading it up or down? No, neither, because momentum is up, but price is at a resistance. So it's a decision zone, yes, but it's not what I'm interested in trading. I would be interested in trading if either price in this scenario, in this particular pair, shows a bull flag like this. That would show a corrective pattern after momentum. That means that price pauses this target, and the breakout means that price will probably go to the next resistance spot. Or if price doesn't stop here, but even if it picks it through a bit, I just need to see a pattern and for follow through to the upside. Alternatively, if for whatever reason, and I don't have the oscillator here, I'm not sure if there's divergence, doesn't look like that. If there would be divergence, for instance, and there's a lot of confluence here at this level, I might look for reversals. In this particular case, I don't see any evidence that this would be a particular strong reversal spot. So I don't think I would look for it myself. So that's a quick kind of 1-2 with analysis and looking at decision spots. Euro dollar, downtrend, bearish momentum, right at support, and no particular pattern. There could be nothing that I think that's very important at this moment. So from my perspective, the 105 spot is a bounce or break level. If it breaks below 105, 104.50, I would be looking for intra-week continuation. If it does not break, this could be a bounce spot, I think, for some relief rally. But, will it happen? No idea. But that would be a reversal idea. But I think that potential is still there as long as price stays above 104.50. I think that could still happen, some kind of retracement to one of these fibs. And from that perspective, these fibs, any of these 4 fibs, in fact, would be then a decision zone from my perspective, because this is probably a retracement within the downtrend for more downside. So where price is at a support decision zone, for the moment I think there's a higher chance of a bounce, but if it does break through Of course, that shows otherwise. And once it bounces, if and once it bounces, then I would be looking at these fibs as decision zones for downside. Pound yen. Quick analysis shows, that price is on a weekly chart downtrend, but strong bounce happening. And basically, price is really in strong momentum here, and uptrend too. 4-hour chart is showing divergence. So for instance, now might not be a good time for a with the trend trade, but once this happened, you see the trend line already there, right? That indicates a pause within this uptrend, within the bullish momentum, and a decision zone could have been the break of that trend line, for instance, right? Or the bottom of that trend line, the flag itself. Decision zone could have been the fib itself, the fib level, for instance, right there. Those are a few things. So basically the analysis is showing upside, right? So the decision zones could be, as stated, first of all, we got uptrend, bullish momentum, we got a pattern and support and resistance levels taken care of. We reviewed that. It looks good for upside. Decision zones could be the fibs, the trend line, the break, the bounce at the trend lines. Same with moving average or time patterns here, candlestick patterns. Now at this moment, if I do the analysis on this one, it's still strong momentum, but divergence is lingering here. Still, I think, although this push is showing still some strength. So who knows? It could still continue, right? The yen is weakening, another bull flag, and there could be one more upside. So from that perspective, maybe the divergence is not very, very strong as yet, at least. But that could eventually happen. Let's face it, this has been a rocket so far. So eventually there will be multiple divergences and there will be a bigger correction. That's something that might not happen right now, but not out of scope that it could happen at one point. So analysis, basically, I do the analysis. Do I like the pair? Yes. Then I look for the decision zones. And I don't trade it until, I get price at my decision zone. And I'm waiting for that to happen. So if it doesn't do that, then sometimes I just miss a trade. If I'm waiting for a particular fib and it doesn't go there, I miss it. If I'm waiting for the break, but I'm not behind my charts at that point, I might miss it. So that's how I do that, with waiting for those decision zones and not just looking a bit more, basically a bit more demanding, a bit more patient, not just looking at a chart and taking a trade right now because I want to trade right now. Setting up the analysis, waiting for the things to develop as I want them to develop, as I anticipate, and I wait for that to happen. So 2 questions, and then I'm going to pass it over to Nenad. He's going to share his view on decision zones. First question: if you draw all the possible supported trend lines, the chart gets a mess. Absolutely, you got to choose the ones that you can't use everything. So that's why I was saying that I'm going to show a few that I use: fibs, tops and bottoms, trend lines, this Keltner nowadays. But you want to balance that indeed. Otherwise, it gets messy. So that's, I think, best from person to person, what they feel comfortable with. For lower time frames, for intraday trading, I like pivot points, accurate pivot point, for instance, that Nenad uses. I like, generally speaking, just trend lines. When I see them, I like Keltner on all time frames. I like to use moving averages, like in this case, 1, sometimes more. And fibs when I see them and I think they're useful, and I draw that manually. I think that's about it. That's my style. The moving average, this one is 144. I also use 21. This indicator, this pivot point indicator, is actually from Admiral Markets Supreme Edition, and you can go easily to admiralmarkets.com, click on platforms, go to MT4 Supreme Edition, and you'll be able to get a lot of extra features, including the Skeltner, including the pivot points, backtesting. There are a lot here. I'll show you quickly here. There are a lot of extra things. Session, sentiment trader, correlation matrices, alarm managers, trading simulator. There are more here. Magnifier, minute charts, some indicators, candle countdown. So there's a lot of things that you can, really a lot of extra features with that. So the decision zone, for instance, if I look at the 50, if I'm looking for a fib, if I put a fib here, for instance, but I don't want to put an entry there. I don't want to put a pending order at the fib, for instance. That happens often to me. Sometimes I do. Most of the time I don't put a pending order at the fib though, unless I really, really like it. So let's say I don't want to put a fib, a entry order at 61.8. So my decision zone is that price gets to these three fibs. Any of these three fibs, for instance, or two fibs, I'm waiting for that. So my trigger would be a candlestick pattern. At this, for instance, this is a bullish formation, for instance, right? Or here too. Those would be triggers. I could zoom into a lower time frame. I could look for time patterns here, for instance. So candlestick patterns, time patterns, those are often my triggers. Or the break here, that could be another trigger. This breakout candle soaring above the trend line. Those are triggers often when I look at the markets. So instead of putting a pending order right at these fibs, which is the decision zone, I said, no, I'll just rather wait, see if price action confirms my decision zone. MA number is, this one is 144 EMA close. I'm not sure about that, Katu, at this moment. No, I think it's better to ask Admiral Markets because they would know more about that. I wouldn't know. So from that point of view, I am going to hand it over to Nenad now. Let's see. Let me give him the screen. There we go.
Hi, Chris. Excellent. As always, yeah, I will continue. And I will explain what you actually guys need to do in order to search for good trading zones and trading opportunities within the different time frame concept. So yesterday, you remember, we actually had our webinar with multiple time frame concept that I usually use when I analyze and trade. But also you need to know about the different style which you will apply to trading. And big thing about it is that you always know, no matter whether you are actually well experienced trader or just slightly more advanced than novice trader, you actually know what you're trading. So you can actually trade trend, counter trend, breakout, and scalping, right? So those are four basic styles that you usually decide when and what to trade. So there are no in-between, guys. There are only finesse in between, like taking something in between intraday trend trade and scalping trade, and that is called scalp swing. But scalp swing, the term that I use actually, and that I think I invented the term because I don't know anyone who used scalp swing term before me. It's just an explanation of cutting intraday trade or prolonging scalp trade. So that is in between intraday and scalp trade. It's called a scalp swing. So basically you will need to decide whether you will take trend, counter trend, breakout, or scalping entry. The first rule when it comes to trend entries is I always wait for the price to reach my zone, POC zone, right? For example, today we had a Australian dollar yen trade and I will refer to that trade back later, that produced nice pips, and I also recorded my trade because you know guys, when I analyze and if I am on the right moment, I also take my trades. It's not just I analyze a trade, give it to you, and then I do nothing. Yeah, I occasionally, very often, I also take the trade. And I took Australian dollar yen, and today, yeah, recorded the trade, will be uploaded later. Chris and I'll upload it later. So you will actually see how it went, but I mean, everything is easy. It was a trend trade based on the pre-analysis facts on POC points and breakout zones. But what happens then if you actually miss your trade? What happens then, guys, if you miss your trade and you're not able to execute it as a trend trade opportunity? Well, what can happen is you might want to jump in a freight train. That is not good. So when you miss a trend trade entry, for example, the price didn't pull back to the zone, you might want to consider either a counter trend breakout or scalping entry. If you don't see any potential breakout entry, you might consider scalping, because scalping is done on lower time frames, guys. You cannot trade always with trend-based entries if you miss the entry. Then you need to switch to, let's say, scalping. Because on 5 minute, guys, if you follow trend, you still can make 15 or 20 pips. I mean, I personally, I don't consider a successful trade if I make 5 pips. I mean, sorry for that, all of you guys and who will watch us on YouTube later, but really 5 pips, I don't consider that successful trade. 10 pips is, I can do that only if I see that my trade is going nowhere, and maybe it will reverse. It's my decision if I want to cut it for 10 pips. But really, that's not how we should base our trades, unless we are scalping. Okay? So you see, those are two main differences between intraday traders and scalping traders. But when you know how to scalp and when you know intraday, you can combine it. So whenever you make a scalp trade, think about which time frame is that. Is it on 1 minute, 5 minute, or 15 minute time frame? Obviously, if it's on 5 minute, you would aim for, let's say, 10 pips. If it's on 1 minute time frame, 5, 6 pips. On 15 minutes time frame, it can even give you 20, 25 pips, and that is more like scalp swing or intraday, because some pairs that trade 80 or 90% ATR in the last 14 days, if you get 20, 30 pips out of it, it's intraday trade. It's not scalping anymore, nor it's a scalp swing. So don't be pushed into extremes from the people who never made any trade in their life, and that they tell you you're not good if you make, let's say, 15 pips on something. Maybe you scalp. Maybe you did a scalp swing. Maybe you cut your intraday trade because you saw that price is going nowhere, guys. That is why we pay attention to average true range, ATR indicator. That is why you know when to make intraday trade, when to make scalp, when to make counter trend, when to make counter trend trade. When price is at extremes, right? You will not make a trend trade if price is reaching support 2 or support 3 or some other important pivot point or historical resistance. You still need to take logic into your trades. That is why many expert advisors simply fail in giving you profits in the long run. I mean, there are a lot of parameters that need to be considered if you want to make a good trade. For example, now, I mean, if you are in a trade, great. But at this point, you don't open any new positions because market volatility will subside, and market volatility will spike just before Tokyo session. So you still have plenty of time to go out with your friends, with your family, girlfriend, boyfriend, husbands, wives, dogs, cats, right? You don't need to be tempted to revenge your trade if you missed or if you had a bad day. So for trend trades, guys, you watch for price patterns, moving averages, chart patterns, historical buyers and sellers, support and resistance. I mean, for some people it might be too much, right? But for me it's not. Because it all boils down to one thing, and it's called confluence, guys. Confluence is what will make a difference and what can make a difference in your trading. Confluence is something that changed my perspective on trading and forex market when I started to use that. I have mentioned many times before that when I started to post on Forex Factory and when I started my forex career, I did mostly pre-London Frankie fake breakout trades. And those Frankie fake trades that I was posting on Forex Factory made me famous on that website in 2010. And but to be honest, it was not a rocket science. I just needed to apply knowledge about Asian session, about price movement, compare historical now moment perspective, and I did very, very successful calls during London, during pre-London movement, such as Frankfurt fake, Frankie fake. People loved me for that and thanked me for giving them free trades. But then I was wondering, it's just one single aspect of a trader, giving some breakout trades, because Frankie fake is actually about making breakout trading opportunities. And during that time, definitely it was, let's short euro dollar rallies, let's find dollar Swissy long trades. You know, it was like, it was pretty much easy to spot Frankie fake breakout. And later I was wondering, I will definitely expand my knowledge, not just to give people good breakout trades, but rather to give them something substantial, organic, firm, that can help them in everyday trading, no matter if they can spot a breakout trade or not. And then I started to, with my program, it was called Practical Naked Trading. That was the primary program that evolved in Camarilla MACD and other things that you can see each day. So what I did is actually I combined everything I knew from my trading career, from reading some of the books, from my screening time, from both my successes and failures in Forex trading. And actually I come to the point where I concluded that price patterns, moving averages, chart patterns, historical buyers and sellers, important support and resistance make confluence. I'm not using one single time frame for trading. I'm not using just a price pattern, just a moving average, just a single support or resistance level, as many traders do. And you know, it's always best to combine. I've learned a lot about candlesticks from Steve Nissen. I've learned a lot about moving averages from my friend who is still and who was full-time equity trader. Chart patterns I learned from my breakout trading. Historical buyers and sellers I learned through my own failures. Because whenever I had a bad trade, I was wondering why, if I did everything correct. But one piece of the chain was missing. That was historical buyers and sellers versus now moment buyers and sellers. Order blocks. You will see order blocks on my analysis almost each day. You will see that. And support resistance, I mean, it's just support and resistance. We don't have to learn anything special about it. We just need to open our chart and we can draw it manually. But in order to do this, I actually need to spend a lot of time, guys, a lot of screening time. And it cost me also a lot because I was not a big fan of demo trading until I realized the only thing that I want to do with demo trading is either if I, let's say, connect other people's accounts and trade it like signal service, or I may do it, but actually I want to treat it as a live account. So then I actually wanted to make something different, and that is when I developed this. But it all boils down to confluence. A lot of traders ask me, Nenad, can we have a POC indicator? Can we have an indicator that that actually show us your POC zones? Unfortunately, it's not possible because drawing POC zones is a domain of subjectivity, guys. I don't know, and I never read any other analysis except my own, simply because I don't want to get distracted. And every time I post the analysis where you see POC zones, I did it manually. There is no indicator for that. For that you need to have the feeling. For that you need to be subjective. You also need to be objective in the term of reading the price action. So maybe for other people POC zones are something fictional, something hard to understand and comprehend. But for me, it's the core of price action. Without it, I wouldn't be successful in giving you the analysis. I would be probably an analyst who works for a company just because he works. But now you know that it's not just me working with a big company, with a great people such as Chris and other people from Admiral. It's also about my love and dedication to Forex market. And that is why some people, POC zones, cannot comprehend the same way I do. I will show you this on chart. I just need to answer two questions. Vita is asking what you mean order blocks. I explained order blocks on yesterday's webinar MTF analysis, but I will mention it later. And also I did an order block explanation a couple of times during webinars, but I can mention it. And Oliver is asking what is POC zone. Oliver, POC zone is the zone where you make entries. Literally, POC zone is the zone where we expect price to react, either bounce or rejection. POC zone is the strongest confluence of price action tools that provide us with 80 to 90% accurate analysis and trading decisions. POC zone is the bread and butter of trading. So that is POC zone. And that is point of confluence. When you do counter trend entries, you will usually take care and watch about divergence or maybe important support resistance such as Bollinger Bands, because Bollinger Bands are also used in counter trend trading. MACD also, guys, is important, but it doesn't matter. You can use any other oscillator such as OSM or RSI or CCI. There are literally a lot of custom-made oscillators in the market. So you can decide by yourself which oscillator you prefer and which you want to use in your analysis. Trend line breaks. Don't forget that trend line breaks are very important in both counter trend and trend trading, but let's say that maybe even more important in counter trend trading, because they tend to have more power when it comes to counter trend. and breakout, trend line break, pullback, retest, continuation. But everything here is confluence. But the confluence on trend is not the same as confluence for counter trend. It's not the same for breakouts, and it's not the same for scalping. Because scalping will use indicator A, B, C, D for confluence. Price action will use chart patterns, price patterns, EMAs, support resistance levels for confluence. Breakouts will use trend line breaks, triangles, breakout, pullback, continuation patterns for confluence. Counter trend will use divergence, Bollinger Band for confluence. You see, guys, everything is different. Everything is different. But one thing is similar. One thing binds them all. Like Lord of the Rings. You probably watched Lord of the Rings. And you know one ring that will bind them all. This is confluence, guys. Confluence binds all these things together in one simple thing, to make profits. So that is the king. Confluence is the king of trading, no matter whether you use price action or indicators. Now I will show you how it looks on the chart. And very important to know is we will have other webinars that will be dedicated to how to spot POC zones and so on. Next webinar in Price Action Training School is actually about how to make entries on price action. So guys, please, as soon as we finish with this webinar, sign up for Price Action Training School. Next class, it is about how to make entries on price action. It's different. It's not stochastic. It's not MACD. It's inside bars, trend line breaks. We will talk about how to make entries on price action trading. That is what we will also do in live trading after New Year. Yes, Ilya is asking, when will you do live trading on Wednesday? After New Year, I hope. I think it should be approved by Admiral Market, so then I guess we will have live trading session on Wednesdays. So as soon as we finish with Price Action Training School, we will actually trade based on Price Action Training School, right? I mean, it's the same as for session recaps. Session recaps are also based on Camarilla and everything that I teach you, but also we will do live trading if we get the chance to place trades. If we don't get a chance to place trades during 1 hour, then we will make pending orders, right? Simple as that. And you will see the logic and everything, yes. So we will do that. We will follow our rules. We will not stray away from the rules, and everything will be fine. So, as you can see here, guys, let's say this is my chart now, and this is standard Camarilla MACD chart that I use for analysis. And now you will ask me, okay, Australian dollar yen. You remember today's analysis about Australian dollar yen? I mean, guys, even with this analysis, you can make pips and money because it's very simple. POC is always where you make entries, and those zones are pure price action. So here, I said if it drops below here at 83.33, you can make an entry. If you fail, there is another chance here at POC2. But also I said here, okay, that 4-hour close or 1 hour momentum above 83.40 should aim for 84.40. So here you could have made pips by trading with this Q here that was explained here. Why 83.40, guys? Okay, why 83.40? Because 83.40 was H3 here. A little bit above it, but momentum is what it counts. So we had actually 1 hour momentum candle here, you see. But then again, guys, what happened is, as you can see here, price dropped, retested this level and proceeded up. So if you went with breakout, pullback, continuation trade, guys, your entry would have been around 83.70. Just breakout, pullback, continuation. You would have made 20 pips. If you went with breakout, retest entry here, you would have made 40 pips. If you watch scalping on 5-minute time frame, okay, just by using scalping system that follows trend, well, you could have made also huge number of pips. So everything was in favor of our longs. But how did I come up with such analysis? Well, again, everything is about confluence, guys. Everything is about. Now, I won't do Australian dollar example because you can read it on the website. It's pretty much straightforward. But for example, we can use euro dollar, right? So guys, very easy. I mean, if you know that 4-hour time frame is going down, is really going down, and the price is still not on some important level of support and resistance, you can actually make counter trade opportunities. You need to watch for weekly, and you see, guys, here that price is actually very close to important support, right? And what then, guys? Well, it's easy. You go to daily, you see trend is down, 4-hour trend is down, 1 hour. Okay, we have retracement. So let's say we will not use this example because it already, the price is already dropping, but let's say we will use this example that happened exactly here, and the time was here. It was yesterday. It was 3 o'clock platform time. So guys, I mean, for me it's simple. I hope for you it's also not that hard. But if this was a confluence, that it was, guys. This was definitely here. You see, you know the pattern. I mean, this is standard pattern, price action pattern, and it's called pennant. So, sorry, flag. So here, when you see the break of this bearish flag, this could have been your entry. But also, guys, this was point of confluence here. So here you could make breakout entry, and definitely here, guys, around this level, here around this zone. You know how I chart. I was showing you on price action trading school. So here, let's see, guys, this is confluence here, and very, very easy to spot. Now, this is what is order block. Order block is the low of this bullish candle prior to its move down. You will always find order blocks to the left of your chart. So when you watch to the left of your chart, you need to find most prominent point. And here, this is double bottom, but even if it was not for double bottom, this was single most prominent point here, and that is order block. Order block is also this. Order block is also this. So let's say some form of swings. Bullish order block is the low of bullish order block is the low of bearish candle prior to move up. Bearish order block is the low of bullish candle prior to move down. This would be a bullish order block if the price goes above it, retests it, and continues further. This one, the height of this bearish candle prior to move up. So that is bullish order block. So very important to understand this concept is that everything is confluence. Here this was trend entry. In the between you could have made scalp entry. Here you could have made breakout entry, and possibly here you would have made counter trend entry, guys. This is some indicator that show crosses. Not important for this, it just prints alerts. So here, guys, so everything was here. Confluence, downtrend, trend-based entry, scalping entry, breakout entry, counter trend entry. So watch for confluence points. That is my really strong recommendation. As I say, this could be a little bit subjective, but that is because we do that. There is no indicator for that. You need to understand price action flow, order flow to actually chart it correctly. Now, with this example, this is scalping system, guys. Okay, this is scalping system that I'm testing now, and I might be maybe explaining it in one of our future webinars. And I mean, still, this is confluence. Remember my first 10 minutes when I was speaking about confluence, but in contrast to price action, this is confluence of indicators. We don't have price action tools here. We don't watch for flags, for Fibonacci, for Camarilla, for flags, pennants, order blocks, whatever. We watch for confluence of indicator alignment. So let's say when green arrow is printed out, when green is above pink, when blue candle is here, when everything is yellow here, we go long. I mean, same when everything is clear, we go short. So the concept is the same. The concept is the same, guys. Confluence of indicators to give you an entry. Now, if we watch another system that I created, double MACD, double stochastic, well, also concept is the same. Blue above red, stochastic pull back to moving averages, stochastic below 20, blue histograms, you go long, right? So see the point. The point is in confluence. Again, confluence of indicators, not price action tools like we use for our analysis session recaps and that we will use for live trading, but actually confluence of indicators that gives you possible profits and possible trading opportunities. Okay? What about counter trend opportunities? Well, guys, we don't need weekly. Let's say 4-hour time frame. Let's say you want to trade counter trend. Then 4-in-3/7 stochastic. I was explaining this method in the past. Trend line break, outside inside Bollinger, outside inside Bollinger with trend line breaks. This is pure counter trend trading. You can also use divergence to give you another confluence point for your counter trend opportunity. And finally, guys, breakout trading. I mean, for breakout trading, you can use sometimes even naked charts, guys. Naked charts. Switch to, let's say, 15-minute time frame. I will, let's see if I have the example here. Okay. Yes, let's say this one, for example. Okay, it's 1 hour. It doesn't matter. Breakouts can happen on any single time frame. So here, you know that this is a form of running triangle here, right? Consolidation triangle. This is an indicator that I also sent you in the past that prints out supply and demand zones. So if we have, let's say, a support here and price is within congestion, we either expect that this support breaks or rejects the price. Breakout trade opportunity. This is counter trend trade opportunity. Trend line break, right? Again, breakout trade opportunity. Do we have another trading opportunity? Let's see if we have a pattern here. Here. Okay, we don't have any specific pattern except for a running pattern. That is definitely a running triangle. Again, here price went up, up, up. Here we have rejection, and definitely if price comes to this zone, it might start to drop. So again, put a trend line and see if it breaks. Because we have historical sellers here. These are historical sellers. Historical sellers will appear, it always is that, they will appear in now moment. The only thing is we don't know how much the price will reject. But if we get an entry, we can treat it as counter trend entry and close it if we see that price is not going anywhere. Usually we close it in small profit. So you see, guys, everything is about confluence. Trading just a simple 1 hour chart with one indicator, I'm not sure. I mean, there are people who can do great trading even without any single indicator. Josip is a great example, our colleague from Croatia. He is a great example of naked trading. He is 30% successful in picking up entries, but his account has been doubled because he knows the holy grail of trading, and that is money management, guys. Forget about systems that will give you holy grail. Holy grail is money management. And if you have a great system, there is no one to stop you from being successful trading except your own yourself, your own ego, your own psychology. For that, you need to talk to yourself, not to me. I can help you, but decision will be ultimately yours. I hope that you enjoyed this webinar. So we try to, this is a little bit overextended, but I see that every person that has joined us is still here. So I'm sure that this is very interesting for you and that you enjoyed, guys. The question, which EMA do you have on the chart? Oliver is asking. It's EMA 89, one single EMA that I use with Camarilla MACD analysis that is great for T89 pattern and spotting confluence. Ron is saying thanks also for the ebooks. You're welcome, Ron. We're very glad. And Ilya is asking, is it possible to send supply indicator with green and lila zone? Of course, Ilya. And guys, you don't need to ask us. If you need an indicator, and if we have it, and if it's not coded or whatever, we can send it to you. So just send me an email, tarantulafx@gmail.com, and we will be glad to actually help you and send you the indicator. Yeah. Bernard is saying he cannot wait for actual live trading. Okay, and also thank you very much for teaching us. Well, you're very welcome. ATR indicator, yes, it's EX format, and you just need, for the ATR indicator, you just need to insert it on your chart. It should work already because ATR works. You need to know two things, guys. MQ4 extension is for people who create. That's the source code of MT4 indicators. EX4 extension is compiled, so people use it to protect their work. So EX4 is for you. If you want MQ4, then it's for creators, right? They protect their work. In order to insert the indicator, yes, okay, this is now technical question that does not have to do anything with webinar, but okay, I will show you. So okay, first let's see if I have the indicator here on this account. I should have it also, so I will show you. Okay, here. So here you have navigator window indicators. You just press left mouse and drag the indicator to the main window, release the mouse, you can enter. I usually put ATR 14 and okay, and here you see the indicator. If something is not showed, then check other indicators that may fog this part with their own data. So clear that indicator and leave only ATR indicator. Yeah, that's it. Kertu is asking about pivot point. Well, please, Kertu, send your request now. I will send it. Maybe I skipped it. I really have a lot of emails during the day, so sometimes I may skip it. So send me an email request now and I will send it. Thank you guys for listening to us. I hope that we will make even more pips this week. And as I always say cheers and trade safe.